Hello and welcome. We're about to break down something that's becoming a huge deal for a lot of people in the UK, HMRC's new lifestyle audits. And we're doing this with some amazing insights from the experts over at Pro Tax Accountant. Look, these guys are the real deal. Their team advises hundreds of UK businesses on these exact issues, and they've helped us put together this essential guide. So let's just get straight into it, shall we?
So let me ask you something. You just got a new car, you're excited, and you post a few photos of it on Instagram. Seems pretty harmless, right? Well, that simple post could be putting you directly in HMRC's line of sight.
Because, and this is no exaggeration, HMRC's super smart artificial intelligence could be cross-checking that post with your latest tax return, like right now. Okay, let's dive into what you absolutely need to know.
Here's what we're going to cover. First, we'll peek behind the curtain at HMRC's Digital Detective. Then, we'll talk about the lifestyle versus income gap. This is the big one that gets you noticed. We'll follow your digital data trail, uncover the top triggers for an investigation, and finally, I'll show you exactly how to navigate this new reality.
All right, first up, HMRC's Digital Detective. We're going inside the system that honestly might just know your finances better than you do.
At the heart of all this is a system called Connect. The best way to think of it is like a giant supercomputer for the tax office. It's designed to sift through mountains of data, connect the dots between you, your assets, and your income, and spot anything that just doesn't quite add up.
And the scale of this thing is, well, it's mind-boggling. The Connect system holds and analyzes over 55 billion, that's billion with a B, separate pieces of data on UK taxpayers. Just let that sink in.
So, does it work? Oh, you bet it does. In the last tax year alone, this system was responsible for clawing back an extra £4.6 billion in tax. That's money that would have otherwise just slipped through the cracks.
And this isn't just some background program humming away. In the last year, it triggered over 500,000 tax compliance cases. That's 540,000 times the system flagged a real person for a much closer look.
And here's a little pro tip for you. We've moved way beyond simple data matching. HMRC has officially confirmed it's using artificial intelligence now to spot complex patterns and highlight red flags, making the whole system smarter and, frankly, a lot more powerful.
So, how does this AI actually catch people out? Well, that leads us perfectly into our second section, the lifestyle versus income gap. This is all about how your public profile can trigger a very, very private investigation.
This quote really just hits the nail on the head. If your social media is full of you living it up in a hot tub in Marbella, but your tax return says you only made a modest £30,000 profit, you're not flying under the radar. Trust me, you are right at the very top of their list.
And this is the exact mismatch that HMRC's AI is programmed to hunt for. On one side of the screen, you've got a public lifestyle, luxury holidays, new cars, designer stuff, expensive hobbies. And on the other side, you've got the declared income, modest profits, a low salary. It's that huge gap in the middle that basically sends a massive flare-up into the Connect system.
Let's make this super real for a second. Imagine a freelancer based in London. On their tax return, they declare an £18,000 income for the year. But on their social media bio, they're boasting about hitting 6 figures in 6 months. Now, to you and me, that might look like a motivational post. To HMRC's AI, it's a direct contradiction that basically screams, "Investigate me now."
So, where on earth is all of this information coming from? That brings us to Section 3, your digital data trail. We're about to look at the exact sources HMRC is watching. And stay with me here, the next point might genuinely surprise you.
The net they cast is massive. Connect pulls data from your UK and overseas bank accounts, from credit card companies, from the DVLA when you buy a car, and the land registry when you buy a house. It also gets data fed directly from online marketplaces like Etsy and eBay, rental platforms like Airbnb, and payment processors like Stripe and PayPal. And yes, of course, it's constantly scraping your public social media accounts.
And here is that surprise I mentioned. Did you know this? Since January 2024, it is no longer optional. Digital platforms like Etsy, Airbnb, and PayPal are now legally required to report your earnings directly to HMRC. They don't need your permission anymore. They've already got the data.
Okay, so with all of this data flying around, who is really the most at risk here?
Now, you might be thinking this is all about targeting the super wealthy, but the reality is actually quite different. Small traders and people with side hustles are increasingly being seen as quick wins for an investigation. And why is that? Well, because their tax affairs are often a bit simpler, which makes it easier and cheaper for HMRC to compare the data, find a problem, and issue a penalty.
So what are the most common things that raise a red flag? Let's get into Section 4, top triggers for investigation. But that's not all. Here's where most people tend to go wrong.
Often, one of HMRC's first moves is to send out what they call a nudge letter. Now, this isn't a full-blown investigation yet, but it's a clear warning shot. For example, if you sell stuff on eBay, you might get a letter because HMRC has your sales data. If you're a high earner with kids, you might get one about the high-income child benefit charge. Or if you're a company director, it could be about your dividends. It's basically their way of saying, hey, we have this data, you might want to double-check your return.
Beyond those letters, there are some really common mistakes that get people flagged. Things like trying to claim personal costs as business expenses, always filing your tax return late, or forgetting to declare income from a side hustle once it goes over that 1,000-pound trading allowance. Another huge one is having big differences between your VAT returns and your annual accounts. So the key takeaway here is consistency and accuracy are everything.
And speaking of expenses, this is the golden rule you have to burn into your brain, the wholly and exclusively rule. For an expense to be tax deductible, you have to be able to prove it was bought solely for your business. Not partially, not mostly, solely. That brand new top-of-the-range gaming laptop might be a little hard to justify if you're a self-employed plumber.
Okay, I know this all sounds pretty intense, but the good news is you absolutely can protect yourself. So let's move on to our final section, navigating the new reality. Here are 4 key steps to help you stay off HMRC's radar. Number 1, declare all your income. With the new reporting rules, they already know about it anyway, so just declare it. 2, keep meticulous, detailed records of every single transaction. 3, be ready to justify every single expense you claim against that wholly and exclusively rule. And number 4, this is a big one, never, ever miss a deadline. Filing late automatically makes you look riskier in their system.
And here's another pro tip from the experts at ProTax Accountant. Use proper accounting software. Seriously. Things like Xero, Free Agent, or QuickBooks. Trying to rely on your memory or a shoebox full of crumpled receipts is just a recipe for disaster. And in this new digital world, errors are exactly what the system is designed to find.
So after hearing all that, are you maybe feeling a little bit unsure about your own tax position? A bit nervous, perhaps?
Now, before we go any further, it's really important for me to say that the information we've discussed is for general guidance. When it comes to making actual financial decisions for your specific situation, you should always consult an expert. And honestly, the best way to get that peace of mind is to just talk to an expert. The team at ProTax Accountant can look at your situation and help make sure your financial records tell the right story to HMRC. You can reach them directly on WhatsApp or by phone at 7985-689-912, or you can drop them an email. And for more crucial tax updates just like this one, make sure you subscribe to their YouTube channel.
So we'll leave you with one final question to think about. Is your tax return telling the same story as your digital life? Because as we head into the 2025/26 tax year, you can be absolutely certain that HMRC is checking.